Hello and welcome everyone to this live session. My name is Tanying Yangsel. I am a housing counselor here at Chaya. Chaya was founded for over 20 years ago. It was founded to address the housing and economic needs for low income South Asians and Indo Caribbean New Yorkers. Chaya is also a HUD certified housing counseling agency. So, as a foreclosure prevention housing counselor, my job is to help you navigate through the system. So if you have any questions about paying your mortgage, if you're struggling to pay your mortgage, if you have questions about refinancing, loan modification, or if you're facing foreclosure procedures, please reach out to me. My information is right here. I also speak Tibetan, Hindi, Nepali, Shachokpa, if that's more comfortable for you. Again, welcome, and we are really lucky to have an expert here today who will help talk about the one of the mortgage relief option, which is forbearance. I will let Yang Chen introduce her. Welcome everyone, and thank you for joining us.
Good afternoon. My name is Yangchen Chatasang. I'm the Homeownership Program Manager with Chaya CDC, and I welcome you all to today's information session on forbearance. Forbearance is one of the mortgage relief options that was introduced by the CARES Act, and today we have with us Oda Friedham, who is a foreclosure prevention attorney with Legal Aid Society. Oda, in her presentation, will talk in detail about what is forbearance, how you can apply for it, and some of the basic terms and conditions about the program. Oda, thank you so much for your time. I really appreciate that you are here with us today in bringing this very important information to our community. And without further delay, I pass it on to you, Oda.
Okay.
All right. Can I start?
Yes.
Okay. Well, anyway, today, thank you for joining us. And today we're going to review what relief is available to homeowners that were affected by COVID-19. But obviously, no slideshow can ever exhaust all questions. We will have a Q&A at the end. You can ask questions, but we urge you right here to contact either Chaya or legal aid if actual problems arise or if you have further questions. Thank you. First slide.
So I will be asking the questions. It says, my family has been affected by COVID-19 and we can no longer afford to make our mortgage payments. Do we have any options?
Yes, you do, finally. Under both the Federal CARES Act, this is a federal law, and the recently passed state law, your lender or mortgage servicer must offer you a forbearance of your regular mortgage payments.
Okay. What is a forbearance?
Good question. During a forbearance, your lender or mortgage servicer allows you to pause or suspend or even just reduce your regular mortgage payments for a limited period of time while you regain your financial footing. Now, it's very important to understand that forbearance does not forgive or waive your mortgage payments, and the lender will be able to recoup the suspended payments at some point. If you can afford it, you should definitely continue to make your monthly mortgage payments.
Will a forbearance affect my credit report?
Absolutely not. Both laws, both the federal and the state law, make very clear that during the forbearance period, your lender cannot send negative reports to the credit reporting agency. That applies if you were current at the beginning of the COVID-19. If you were previously in default, then obviously there may have already been a report to the credit agency that you were behind on your mortgage. But as a result of the forbearance, absolutely no negative reports can be made. Also, your lender cannot charge any late fees during the forbearance period.
For how many months does the lender have to grant me a forbearance?
Under both the federal and the recently passed state law, the lender must provide you with a forbearance for up to 6 months, which can be renewed for another 6 months if your COVID-19 related hardship continues.
So I was behind on mortgage payments before being affected by COVID-19. Am I still eligible for forbearance?
Yes, again, both under the federal law and the state law, even if you were delinquent or behind on your mortgage payments, or you were in the process of applying for loan modification, or had entered into a trial payment period, the lender must offer you forbearance.
How do I apply for forbearance?
Well, first off, you should never just stop making payments. Instead, you should contact your lender or mortgage servicer as soon as possible. And if possible, contact your lender online because calling your mortgage server may involve long waiting time. And that way, if you do it online, you have a written record that you made the request. And as far as where to send the request online, check your mortgage statement for how to contact your lender.
Do I have to submit documents to be eligible for a forbearance?
Well, that depends on the type of mortgage you have. If your mortgage is federally backed, you merely have to attest, perhaps in writing, that you or someone in your family has suffered a COVID-19 related hardship. If, on the other hand, your mortgage is regulated by the New York State Department of Financial Services, also known as DFS, you need to ask your servicer what, if any, documentation is required.
How do I know what type of mortgage I have?
Well, that's a very good question. About 70 of our mortgages are what we call federally backed mortgages, and they include FHA, VA, in other words, Veteran Administration, Fannie Mae, or Freddie Mac mortgages. Now, how do you know? To check whether your mortgage is backed by Fannie Mae or Freddie Mac, you can visit the following websites, which we have listed on the slide and which we can provide to you again at the end. But when you do that, you must be prepared to provide the borrower's name, the address of the property, and the last four digits of the Social Security number. As far as VA and FHA mortgages are concerned, they're usually identified in the language of the mortgage instrument. And typically, FHA mortgages usually have the FHA loan number right on the first page on the top right corner. So you can also see it there.
Yeah, and you can also contact Chaya to if you want to know how to find it. We can help you. Right. So I think we talk about the New York State regulated mortgages.
Yes. So most mortgages that are not federally backed are regulated by the New York State Department of Financial Services, with some rare exceptions, but generally they are regulated by DFS. Now, in the beginning, in response to the COVID-19 crisis, DFS issued emergency regulations requiring lenders to grant forbearance for up to 3 months. But in June, just recently, the governor signed into law the forbearance bill, which is also known now as Banking Law 9X. And that law really aligns state regulated mortgages with those that are federally backed, requiring even those lenders to grant forbearance for up to 6 months, renewable for another 6 months.
And what happens at the end of forbearance period?
Yeah, that right from the beginning was a very big question. And neither the CARES Act, that is the federal law, nor the initial state regulations address the issue of how lenders would recoup the suspended payments. In fact, initially, some lenders of state regulated mortgages appeared to demand repayment of the suspended payments as a lump sum at the end of the forbearance period. That was an option that was hardly affordable for people. Just imagine you're out of work, you're finally back to work. You certainly would not have the entire amount as a lump sum. So people were very concerned. However, the next slides will show how lenders now, under all these, both the federal and state law, have to offer homeowners affordable option for recouping the suspended mortgage payments.
So, yeah, I do. Sorry, what are my options with the Freddie Mac or Freddie Mac mortgages?
Well, services of Fannie Mae or Freddie Mac mortgages must contact you within 30 days of the end of the forbearance period to discuss your options. If you're able to resume your mortgage payments, like you got back to work, and you were current as of March 1st, 2020, that is just before the COVID-19 crisis began, the suspended payments will be deferred as a non-interest bearing balance, which is due when your loan matures or you refinance or sell the property. Now, if you were already in default at the beginning of the COVID-19 crisis, then the lender must consider you for other options, including a repayment plan or one of the post-forbearance loan modifications that they typically have.
I have an FHA mortgage, and what are my options at the end of the forbearance period?
Again, similar to Fannie Mae and Freddie Mac, if you're able to resume your payments and you were current as of March 1st, 2020, you may be eligible for the COVID-19 so-called National Emergency Standalone Partial Claim. Well, what is that? A standalone partial claim, that means that HUD will defer the amount due as a non-interest bearing mortgage payable when your FHA mortgage matures, you refinance or sell the property. Now, there's one caveat which we are not discussing in this slide, but if you previously had an FHA loan modification and you already had a partial claim, which is similar, it's a subordinate non-interest bearing mortgage, you may have used up that portion. So that is something you would discuss more specifically with CHIA or legal aid, depending on the circumstances. Now, if you're not able to resume your payments, the servicer must evaluate you for FHA HAMP.
What are my options for mortgage if it's state regulated, my mortgages?
Well, luckily, because of the new state law, now no more lump sum. Instead, the lender has to offer a number of options, which are really quite good. One is simply to extend the loan term by the duration of the forbearance. So, for example, if you had a forbearance of 6 months, let's say, then your loan term would simply be extended by another 6 months. So that is probably the least painful options. Another one would be allowing the borrower to enter into a repayment plan that would stretch repayment of the suspended amounts over the term of the mortgage, that is the remaining term of the mortgage. So for example, say you had 10 years left on your mortgage, then payments could be stretched over 10 years, which would probably result in a very minimal increase of your monthly mortgage payment. So that is another option. Finally, the law also requires the lender and the borrower to negotiate for a loan modification. And finally, the state law makes clear that if for some reason a loan modification is not possible, then deferring the suspended payment as a non-interest bearing balloon is the final option, which again, similar to FHA and Fannie Mae, is due at the maturity of the loan or refinance or sale of the property. Again, it's important to remember that the lender cannot demand the suspended payments to be repaid at the end of the forbearance period as a lump sum.
Right. What if the lender refuses to provide me with the forbearance?
Yeah, that is a little bit more of a complicated question, but here it is. If your mortgage is state regulated, the state law generally mandates that the lender provide homeowners affected by COVID-19 with forbearance. And failure to comply with that state law is actually a defense to a foreclosure. That is a foreclosure that is specifically commenced because you failed to pay during the period that you would have been eligible for forbearance. Now, there is one small, you could call it a loophole in the law. It says this: if the lender of a state regulated mortgage claims that a forbearance is not possible for a particular borrower because of, internal requirements that the lender may have, then the lender cannot just say no and refuse, but instead must prove to DFS the reason for the denial with detailed documentation. And that is something you would have access to as well. So in other words, just simply saying, no, hey, you're not eligible, no, that's not good enough. So keep that in mind. Now, if your mortgage is federally backed, then the Federal CARES Act makes forbearance absolutely mandatory. In other words, when you read the law, it says shall, not may, but shall provide a forbearance. There are no exceptions to this.
So I was behind with my mortgage payments before COVID-19. Can the lender foreclosure on my home?
Well, foreclose, yeah. Actually, for federally backed mortgages, and we discussed them earlier, FHA, Fannie Mae, Freddie Mac, and VA, there is a moratorium on all foreclosures, which lasts now through August 31, 2020. And it's possible that it might even be extended beyond that. But right now, it's just through August 31st. Lenders of state-backed mortgages could theoretically commence foreclosure action, but again, the homeowner had to be served with a 90-day notice, which is required by law by the mortgage servicer. And during the moratorium that the governor actually instituted, which is unfortunately expired, during that time, one could argue that the lender really was not able to issue 90-day notice, that is pre-foreclosure notices. So we don't expect at this moment yet that a lot of foreclosures will be started, but it's a little bit more of an evolving situation. It's not so clear, but the courts, you should know, are still not really open for general foot traffic. You can't just go to court. And therefore, all the settlement conferences that you otherwise would have been entitled to as part of the foreclosure are currently administratively adjourned or even just scheduled for the first time in some future time. So really, practically speaking, not much is happening right now with foreclosures. Well, this is just an important note at the end. Unfortunately, we all know that during all the different foreclosure crises, there are unfortunately many scammers that basically seek to take your money but not provide any services. That may claim they're going to modify your loan, get rid of your loan, give you a forbearance, but you must pay them. Well, actually, you don't have to pay anybody. It is only the lender that can grant you a forbearance, and absolutely no fees are required. We strongly urge you to not give your private information to these scammers. And these scammers send you notices, some of which sometimes look outright official. So you really have to be careful. And I would strongly argue that if in doubt, contact Chaya. They will be able to tell you if it's a scam or something legitimate. And also, really important, do not sign any papers before consulting one of the legal service providers. Finally, some of these solicitations may actually violate the law. So we have a law against loan modifications where these scammers, they must disclose that there are free services available, there must be a contract, and I have not yet seen a single loan modification scammer that actually follows the law. So there is a law, however, that forbids or prohibits these practices. And if in doubt, you may also file a complaint with the New York State Attorney General by calling 212-416-8300, or you can go on the AG's website and find a complaint form. Thank you. Oh, yeah. For further information, of course, you will be able to call Chaya, but if you're in foreclosure and you're already in court, then we urge you to call us at our Queens helpline number, which we check almost daily, and the number is listed there, 718-298-8979. And really before we have done, I would just say, as legal service providers and as also community legal services, we have done this work for over 10 years. And just because we're free doesn't mean we don't provide good quality service. We have a lot of experience, and we strongly urge you to not necessarily pay an attorney when you are already struggling to pay your mortgage. But if you do, then please make sure that you read the retainer agreement with the attorney and be sure that he or she has actually experience in providing foreclosure defense and agrees to appear at settlement conferences. Thank you.